என்ன சார் கனெக்ட் ஆகும்?
So again, welcome everyone. Thank you for joining us on today's webinar. I am CS Nikita Singhal from Webtel, and I am welcoming you for the session on practical case studies on input tax credit. Now let us have a brief intro about Webtel. As we all are living in the era of digitalization, where everything from the simple to complex demands eases with technology, here is why Webtel believes in making IT a way of life. We are India's one of the leading e-compliance companies known for its compliance management, office management, and HR management solutions. We have incorporated a knowledge academy as well, where you all can do all your learnings by opting for self-paced courses, staying in line with the blogs, keeping pace with webinars, etc. We are presenting a webinar on practical case studies on input tax credit in association with AFTP, that is Association of Finance and Tax Professionals, presented by our renowned speakers CA Tushar Agarwal and CA Chetan Kumar Agarwal. A brief intro about AFTP now. AFTP vision is to provide qualified opportunities to members designed to enhance their professional development, continuing education, peer-to-peer networking, and ongoing member benefits in order to improve services to our respective clientele. Now, let me introduce you to our speakers of the day. So, our first speaker today is CA Tushar Agarwal. He is co-founder of Tattvam Advisors. He has more than 10 years of experience in indirect tax and has worked for more than 8 years with Lakshmi Kumaran and Sridharan attorneys. He was also deployed by the GSTN for GST implementation and has worked closely with government officials. He has worked extensively with the Government of India GST in designing GST returns, audits, and other formats. So, sir, I welcome you from the side of.
Thank you.
Yeah, so our second speaker is CA Chetan Kumar Agarwal. He is executive partner, Tattvam Advisors. He is also an indirect tax professional with rich experience in GST, service tax, excise, and VAT. He has around 10 years of professional experience in tax advisory services. Prior experience includes working with SARC and Associates and leading law firm Lakshmi Kumaran and Sridharan. He has rich experience in advising various national and multinational companies across industry sectors such as fertilizer, real estate, hospitality, etc. in various aspects of indirect taxes. He was part of domain expert team. So, Chetan sir, I welcome you on behalf of Webtel.
Thank you, Nikita.
Okay, so just a little housekeeping before we get started. If you have any questions during the webinar, please type them into the chat box. We will take the same at the end of the webinar. So now, without further ado, we will turn the time over to our speaker, Mr. Tushar sir. So, sir, please let us start the webinar now.
Thank you so much, Nikita, for your warm welcome. Let me share my screen. I request everyone to please keep yourself on mute. Good evening, friends. In today's session, we will be discussing practical case studies related to input tax credit.
करण ये बिल दिया दो नीचे
Akash, can you mute everybody?
भेज दिया
So in today's session, we will be discussing practical case studies related to input tax credit. The first case study will be in respect of how to handle 2A 3B mismatches. We may have discussed this issue earlier also, but in the light of various latest jurisprudence and latest amendments, we will revisit this issue because this is a very common issue being faced by everybody. Thereafter, we will look into the case study related to ITC on construction services. So whenever I'm constructing a new plant, new factory, how do I strategize my construction and how to avail maximum tax benefits in respect of construction of a new factory or a plant. Thereafter, we will drill down into the case studies related to ITC on various gifts and sales promotion schemes. We are aware today we have different kinds of schemes being opted by a manufacturer for the dealers, say giving of foreign trips or giving buy one get one free offers, etc. So what are the GST disputes and implication on all such schemes? We will have a look at that. Thereafter, we will study the employee related activities and the ITC on employee related activities, whether ITC is available on uniform, on canteen services, etc., etc. Then some case studies related to CSR activities, Rule 42, 43, and other issues depending upon time. Let's move on to our first issue of 2A 3B mismatch. How do we deal with the various kinds of notices which we are receiving? We may be receiving a normal scrutiny of return notice under section 61 or even a show cause notice under section 73, 74, or even during departmental audit. 2A 3B mismatch is one of the point which is always raised by the department. How do we deal with all these notices? So whenever you receive such notices, please firstly understand the period which is covered by this notice. So our entire exercise can be divided into 3 periods. First is from 1st July 2017 till 8th October 2019. Why 8th October 2019? Because from 9th October 2019, Rule 36(4) was implemented, which provided that the maximum credit which a taxpayer can get is what is coming in 2A plus 20% as provisional credit. And thereafter, this provisional credit has been reduced. Then the second period is from 9th October 2019 till 31st December 2021. And the third period is post 1st January 2022. It's a very, very important. What is the current scenario after 1st January 2022? Because there are various budget amendments which have become effective. So we will discuss that also. So we will firstly discuss the period related to July 2017 till October 2019. So whenever we receive notices for 17, 18, 18, 19, the first exercise which you should do, always remember, whenever you get a notice, there is a difference of say 1 crore rupees of mismatch in 2A 3B. Please perform updated reconciliation. Step number 1, please perform updated reconciliation. Many a times we have seen that the number quoted by the officer and the notice is not correct. So always download the latest 2A and reconcile your 3B with 2A. So many times we feel and we have seen that if the notice says the mismatch amount is of 1 crore rupees, but in actual it is not 1 crore, it is 70 lakhs. So you write in your reply, sir, we have please find attach our updated reconciliation and the mismatch amount is not 1 crore rupees, it is only say 70 lakh rupees. And out of 70 lakhs, you will have two kinds of vendors. When vendors are those first category of vendors, these are those vendors who have actually paid tax to the government. So first category of vendors are those vendors who have actually paid tax to the government and they are ready to cooperate with you. It's just that they have done a clerical mistake. What can be the clerical mistake? They forgot to report it in B2B and by mistake they have reported it in B2C. So it will not get reflected in GSTR 2A of the recipient, but as a supplier, he has paid the tax or he has written a wrong GSTR number. So there can be certain clerical mistake which he has done, because of which the invoice is not getting auto-populated, but ultimately he has paid the tax. He is confirming that he has shown this figure in his GSTR 3B and he has paid the tax. What to be done in such a situation? To my mind, there is no need for reversal of credit. There is no need for reversal of credit because it's only a procedural mistake. Ultimately, he has paid tax to the government. So no need for reversal of credit. What should I do as a taxpayer? I need to take an undertaking from him. I need to take a declaration from him stating that these are the invoices he has issued to me. However, by mistake, he has not reported these invoices in GSTR 1, or he reported by mistake in B2C table instead of B2B table. However, he has duly reported these invoices in GSTR 3P and has paid the tax to the government. So let me take a declaration from them. Second, recently, Maharashtra has issued an internal circular wherein on the similar situations, they have said that the recipient can produce a CA certificate given by the chartered accountant of the supplier, stating that the supplier has actually paid the tax. So for all big items, big invoices, let me go to the supplier and ask a CA certificate from him, stating that whatever invoices he has issued to me, the tax has been duly paid to the government. It's only a procedural mistake that he has not uploaded in GSTR 1 or wrongly uploaded in B2C table, etc. So declaration, second, CA certificate. These two documents are very valid documents which you need to take from the supplier. And in your reply, please write that, sir, out of this mismatch of dash amount, so much of vendors have already paid tax to the government. They had done only a procedural mistake. So in such a situation, no reversal can be demanded from me. Please find attached the declaration of my vendors as well as the CA certificate given by them, which clearly proves that the tax has been paid by the supplier. So that's the first step. So very important for period 17-18 till 2021 or up to the date. Please perform your updated reconciliation. If there is a mismatch, go to the supplier. If supplier is saying that he has paid the tax, but there is a mistake in GSTR 1, obtain an undertaking from him and obtain a CA certificate from him. These two documents are very, very valid documents for fighting the case in future. So this is first category of vendor. Moving on to the second category of vendors. They are those vendors who are not responding to you, not cooperating with you. You have paid money to them. They have not deposited the tax. They have not filed their GSTR 1. They have not filed their GSTR 3B. They are not picking your phone, not giving you undertaking, not giving you CA certificate. What to do? Am I required to reverse the credit? Is credit required to be reversed? Let us see the provision. Section 16(2)(c). It specifically says that subject to the provision of section 41 and 43A, the tax charge in respect of such supply has been actually paid to the government. So the notice will say under section 16(2)(c), you can get credit only if the tax is paid to the government. The law is very clear. Section 16(2)(c) clearly says that if the tax has not been paid to by the supplier to the government, you cannot get the credit. Hence, reverse the credit. I would like the audience to write in the chat box. Do they believe that the taxpayers, in case of mismatch, if they are not able to produce the undertaking and the CA certificate of the vendors and vendor is not cooperating, you have paid money to the vendor, but vendor has not paid the tax. In such a situation, whether reversal is required under section 16(2)(c), do you think reversal is required under section 16(2)(c)? I want people to write in the chat box, yes or no, because this is section. Let us go legally. Let us not go what is logically. So yes, it means Jitenji, everybody is saying that reversal is required. If government has not paid, if the supplier has not paid tax to the government, even he is not giving me any undertaking, not giving me any CA certificate, then reversal is required. Law is clear. Yes, to be reversed. I think most of the people are saying it is required to be reversed. So Sohail ji is saying no. So more than 80% saying reversal required. Fine. What is my view? And how are we practically dealing this situation? In my view, and one Nimiji is saying that officer is even adding interest. Obviously, when he will ask for reversal, he will ask for interest, he will ask for penalty also. And everybody is facing this issue, I am aware. Now, what is my view? In my view, no reversal is required. Let me repeat, in our view, no reversal is required. And I will be giving you multiple reasons to substantiate why reversal is not required. And then you guys tell me whether the grounds which we will be discussing in next 5 minutes are good enough to fight the case or not. Because it's a very, very common issue being faced by everybody. Ground number 1, why no reversal is required. Please see section 16(2)(c), the way it is drafted. It is written subject to the provision of section 41 and 43A. the tax charge in respect of such supply has been actually paid to the government. So it starts with the subject to the provision of section 41 and 43A. So what is section 41 and 43A? If we see section 41, 42, 43A, these sections are a complete code in itself for availment, reversal, and reclaim of credit in case of matching of credit. So these are the complete code in itself which have been drafted under the GST law, section 41, 42, 43, read with rule 69, 71. And the entire section and rules, the way they have been drafted, they are entirely based on GSTR 1, GSTR 2, GSTR 3, and we have form called MIS1 and MIS2. Initially, if you remember, we had a concept of GSTR 1, 2, 3, which was supposed to be filed, but due to technical glitches, GSTR 2 and GSTR 3 was on hold. It was only GSTR 1 and 3B which was implemented. Similarly, this section and these rules talk about mismatch in form of MIS1, mismatch in form of MIS2. You see something called MIS1, MIS2 on GST portal? The answer is no. Do you see GSTR 3, GSTR 2 on IT portal? The answer is no. What do you see? You only see GSTR 1. You only see GSTR 3B or GSTR 2A or 2B, but not MIS1, not MIS2. So the entire matching principles, the way it was drafted in the law, they are based on the return filing system which was contemplated at the implementation of GST and which was never actually implemented. When these sections are based on GSTR 1, 2, 3 and MIS1, MIS2 forms, and these forms are not implemented, then section 41 and 43A and 42 are not implemented. When this section itself is not implemented, how can section 16(2)(c) be implemented? So the first argument which I will take before the honorable court is, sir, this subsection is subject to section 41 and 43A, and section 41 and 43A is not implemented in India because of technical glitches. Section 41, 43 is not implemented, hence section 16(2)(c) cannot be enforced. That's the first argument which I will be taking. The second argument which I will take is that there is a legal maximum. It says that the law cannot compel you to do something which is impossible. Law cannot compel you to do something which is impossible. So there was no system in the starting in 1718 itself wherein you can actually check whether the taxpayer has paid the tax or not. GSTR 2A was introduced for the first time in October 2018. Prior to that, there was no intimation to the taxpayer. There was no concept of GSTR 2A. And the fact that even GSTR 2A is not a proof that the supplier has paid the tax. Let me give you an example. I am a supplier. I have issued invoices worth 5 crore rupees. So in GSTR 1, I uploaded 100 invoices, total GST liability 5 crore rupees. It gets auto-populated to the recipient. And at the time of filing GSTR 3B, when I go and file GSTR 3B, can I file GSTR 3B of a lesser amount? Yes, the system allow. I am filing GSTR 3B, say of 5 lakh rupees only with tax liability of 5 lakh rupees. So what is my portal showing? GSTR 1, 5 crore rupees. I uploaded the invoices. It got auto-populated to your GSTR 2A. And then I filed my GSTR 3B with 5 lakh rupees as liability only. When you see in your GSTR 2A, what will you see? You will see, yes, invoices coming in GSTR 2A. And you will also check the return filing status 3B. It will be filed. But effectively, the tax has not been paid by me to the government. So today also, against that particular invoice, whether the tax has been paid or not cannot be checked. It could have been checked only once when the initial GSTR 3 concept was implemented. Because initially, what was contemplated in GSTR 3 was that whatever liability I show in GSTR 1, the same liability will be auto-populated in GSTR 3. And hence, I cannot manually change my liability in GSTR 3, whereas in GSTR 3B, what is implemented in India today, it is possible to change my liability. And hence, I cannot actually check whether the tax has been paid against that particular invoice or not. So if I cannot check that, how can this section be implemented? This will be my second ground. Third ground, which is available to me, is my earlier jurisprudence under the VAT regime. In VAT regime also, we had similar kind of concept. And there the courts have actually distinguished between two kind of recipients. One is a bona fide recipient and another is a fraudulent recipient. And what the court has held that if you are a bona fide recipient, no reversal required. Let me read so many judgments. Gherulal Balchand, Punjab, Haryana High Court, a very landmark judgment. Let me read the face. It held that no liability could be fastened on a buyer on account of non-payment of tax by the seller in the treasury, unless a case of fraud is made out by the revenue, or unless collusion between the seller and buyer is established. Very important. So I have to specifically write in my reply, sir, I am a bona fide buyer. I have fulfilled all the conditions of availing the credit. I have GSTR invoice copy. I have made the payment to the vendor. I have received the goods. I am a bona fide buyer. There is no fraud, no collusion between me and him. Please allow me the credit. All these judgments prove that credit is allowable unless and until a case of fraud is made out. So that will be my third ground. Moving on to the fourth ground, and the most important ground is relying upon my recent GST judgments. So there are 2-3 judgments which have come on the very same issue, whether reversal is required or not in all these circumstances. Let me read all these judgments. Bright Star, LGW, Davy, Webtel Enterprise. So let me discuss these judgments with you. In Davy Webtel Enterprises, Madras High Court held that why are you coming directly to the recipient for reversal of credit? Please go to the supplier and investigate him. If supplier has not paid the tax, you have the details. Please go and investigate with the supplier and then come to me. So the very important judgment, Madras High Court, they said that don't straight away go to the recipient. If you have the details, please try to recover the amount from the supplier. Very, very important judgment. Second, Bright Star, Orissa High Court. It said, to attribute a case of fraud in availing ITC from non-existent supplier, the department has to satisfy a threshold of showing that the purchaser indulged in transaction with full knowledge. So in these cases, the registration of the vendor was cancelled. So registration got cancelled. The department came to the recipient and said that, please reverse the credit. The court held that at the time when you have received the services, at that time the supplier was registered. So until and unless you have proof, they are saying to the department, until and unless you have proof that the supplier and the purchaser were engaged together for undertaking a fraud, you cannot make out a case that just because down the line the registration got cancelled, ITC is required to be reversed. There should be a proof and allegation from the department stating that the time when I purchased the goods, at that time I knew that the supplier is not paying the tax. I was a party to the fraud. Just because subsequently the transaction, that registration got cancelled of the supplier, not enough to say that ITC is required to be reversed. LGW, again, a very important judgment of Calcutta High Court. It said, availment of input tax credit cannot be denied on the ground that purchases made by the petitioners are from non-existing suppliers. So all these judgments support us. So let me write all these judgments in my reply and state that no reversal is required till the time I am in a position to substantiate that I have fulfilled all the conditions. I have the copy of invoice. I have made the payment. I have received the goods and services. I am a bona fide buyer. I'm not a party to the fraud. So friends, after discussing all these judgments, etc., do you think that for the initial period 17, 18, 18, 19, and given that there were so many technical glitches, if I have the copy of the invoice and there is a mismatch, vendor is not cooperating with me, fine enough, vendor is not giving me any detail, am I required to reverse the credit? Do we have a good case basis, whatever discussion which we just had and whatever grounds which we just discussed? Do you think we have a good case to fight that no reversal is required? I want you to write on chat box. What is your individual opinion? Do you think if you are a judge and all these grounds are taken before you, you feel these are some good enough grounds to fight the case? Good case. Yes. Yes. Krishanji is saying yes. First is saying yes. Yes, it's good. So my view is also same that we are not required to reverse the credit in such situations. But practically, what happens? So whatever we discussed is the legal part and the academic part. Let's now drill down into the practical part. Practically, sometimes what happens is that officer doesn't agree. He says you have to reverse the credit. So there are two options. Either he pressurized me so much that either you reverse the credit immediately, otherwise I will drill down into other investigations, blah, 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 blah. And I am required to reverse the credit because of various commercial reasons. In such a situation, my advice would be, even if you are reversing the credit for whatever reason, practical reasons, you are required to reverse the credit at lower level, etc. Then in such a situation, please write a letter at the time of reversing the credit stating these grounds that we are not required to reverse the credit because of these grounds. However, on your instances, we are reversing this under protest with the right to reclaim. So write a letter to the department that you are reversing it under protest, so that down the line, if you get favorable judgments, and I'm sure within 1 year, you will get a lot of judgments on this very similar issue. In such a situation, you will be able to reclaim the credit, whatever you have reversed. So even if you are reversing the credit practically, always write a protest letter so that you can reclaim it in future period of time. Otherwise, you can if the amount is big, you can always go ahead and tell officer to issue a show cause notice and again take the matter legally. So it all depends upon case to case basis, the quantum of amount, the litigation power of the client, whether he wants to litigate, he wants to reverse, the cordial relationship with the officers, many other things to practically take a stand. So whatever we have discussed is for the period October 2019, and even for the period after October 2019 till 31st December 2021, the same grounds will hold good. Apart from that, you have to take one additional ground. That additional ground is that Rule 36.4 was implemented from 9th October 2019. And that rule said that the maximum credit which you can take is what is coming in GSTR 2A plus 20%, which was later reduced to 10%, 5%, etc. The another ground is that this rule is contradictory to the Act. There is no such provision in the Act, and the rule cannot go beyond the Act. So rule is ultra vires, it cannot go beyond the Act, and hence I'm not required to reverse the credit. So that's an additional ground which we will have to take apart from the various grounds which we have discussed. So whatever discussion which we have done is only for the period till 31st December 2021. I repeat, whatever discussion we have, whatever points which we have discussed, everything is till 31st December 2021. Effective 1st January 2022, no such grounds are available to you. You have to strictly follow these reconciliations. Do these on monthly basis. Follow up with your supplier to pay the tax. Otherwise, you will not be in a position to claim the credit. All these grounds will not be valid after 1st January 2022. Why? First reason is because in budget 2021, they have specifically made an amendment in section 16, wherein they have specifically introduced the clause AA, which said that the credit will be available subject to the condition that the supplier has furnished, that the invoice or the debit note referred to in clause A has been furnished by the supplier in the statement of output supply, justice GSTR 1, and the same has been auto-populated in to the recipient. So they have written in the Act itself. This was the argument which we used to take, that this is for the first time they have written in the Act that this condition of putting the invoice in GSTR 1 and this getting auto-populated in GSTR 2A. It is coming in the Act for the first time from 1st January 2022, and it is not retrospective. Please note, this is not retrospective. This condition has been implemented with effect from 1st January 2022, and it is for the first time in the Act they have introduced this condition. Earlier, this condition was not there. Hence, for the previous period, no reversal required. However, henceforth, I have to follow this strictly without fail. Apart from that, they have also amended Rule 36.4, and they have specifically said that this reconciliation which you have to do is you have to do it with GSTR 2B. So it is amply clear now. 1st January 2022, I have to follow 2B versus 3B reconciliation on monthly basis without fail. No arguments available to fight. Please strategize your purchases. Either have a strategy to pay the tax only when the amount is auto-populated in your GSTR 2B. Restructure your contract terms to safeguard yourself that if your ITC is reversed on account of supplier failure, you are in a position to recover them. Follow your policy, categorize your vendors, category A, B, C, check whether they are compliant or not. So have your internal processes better to follow this. Legal grounds will not support you. Apart from this, so what we have discussed, till 31st December 2021, good case to find that I am not required to reverse the credit. From 1st January 2022, Budget 2021 amendments have become effective. Finance Act 2021 amendments have become effective. Rule 36(4) has been changed. I have to follow the reconciliation without fail on monthly basis, that too with GSTR 2B. Now, in this budget, it is not yet implemented. Now, what I am discussing is yet to be implemented. It is only proposed in budget 2022. It is only a proposal, not yet implemented, but very, very big impact. Please listen to this carefully. They have again added one more condition in section 16, and it says that the details of input tax credit in respect of the said supply communicated to such registered person under section 38 has not been restricted. So it says that whatever communication has been done to you in GSTR 2B, that should not be restricted under the portal. And they have introduced section 38 also. So in 38, when this will get implemented in GSTR 2B, you will get a status whether credit is eligible or credit is not eligible. If it is not eligible, you will not be in a position to claim the credit yet to be implemented. And what will be the situations of not eligible? When will the law says it is not ineligible? First, there are various conditions which they have prescribed in section 38. I'm just reading 2-3 important conditions. First, if the supplier has defaulted in payment of tax, that is, he has not filed GSTR 3B. So if he has not filed GSTR 3B, portal will show you not eligible. Next, if there is a difference, a loophole which we were discussing at the start of the webinar, if there is a difference between the supplier's GSTR 1 and GSTR 3B above a certain prescribed time limit. So in GSTR 1, he has shown 5 crore as turnover as GST liability. In GSTR 3B, he has shown 5 lakhs. So I feel that this threshold may come out as 5%, 10%, 15%, whatever may be the threshold that will be prescribed. It is the difference between GSTR 1 and 3B is above that threshold. In your GSTR 2B, the status of the credit will be ineligible. You will not be in a position to claim the credit. Next condition, it has a major impact on the industry. If as a supplier, I have filed my GSTR 1, I have filed my GSTR 3B, my GSTR 1 and 3B is also matching. However, the input tax credit which I have availed for filing my GSTR 3B, if there is a gap in the input tax credit which I have availed in my 3B and my 2A above a certain prescribed time limit, in such situation also, the invoices which I have issued to you guys, you will not be in a position to take the credit. If your supplier inward reconciliation gap is above a certain prescribed time limit, then also the portal will show the message ineligible credit. So it is going a step before and also looking at the inward reconciliation of your supplier, whether they are reconciling properly or not. If they are not reconciling, you will not be in a position to claim the credit. So it will be an ineligible. So that is the amendment which they have proposed. We await how this will be actually implemented on portal. And we also await, suppose today there is a gap. I understand the portal is showing ineligible credit because my 1 and 3B is not matching. Down the line, if I rectify my mistake as a supplier, how this ineligible will become eligible? There are so many open issues pertaining to section 38 and its implementation. We have to wait and see how it will be implemented. What we have seen in past is that any budget amendments generally is implemented only after the December month. So this amendment also, because all the state have to pass the act, there is a complete process for a budget to become an act. And it will take a couple of more months. So maybe this will be implemented only by December 2022. Until that time, we are hopeful that an FAQ and SOP will come on how these sections will be implemented on GST portal. Now we will move to our second case study, that is ITC on construction of immovable property. So the case study which we want to discuss is that I am a taxpayer, I want to construct a new factory, new plant. How do I make my construction strategy from GST perspective? Before we drill down into that particular case study, let us see the law and some basic jurisprudence. Let us understand the basic concept so we both are on the same page, and then we will see answer to the case study which we want to discuss. Friends, section 17(5)(c) and D contains the list of goods and services on which credit is not available. And what does this section say? It says, works contract services or other goods and services which are used for construction of immovable property for your own account, except plant and machinery. No credit available. So any works contract services, any goods, any pure services, whatever you are availing, if you are using it for construction of immovable property, with an exception that this immovable property is not a work plant machinery, then credit is not available. Further, credit is available to certain works contract, etc. if you are supplying the similar set of services. I'm talking about a simple case. I am a manufacturer. I want to construct a factory. I'm looking at this provision. So I will not get the construction credit of construction of immovable property. However, I will get the credit of construction of plant and machinery. So this is what the provision says. And now what do you mean by immovable property? Let us also understand this. Immovable property is not defined under the GST law. We have definition under the General Clause Act. We have definition under the Transfer of Property Act. And whenever we see these definitions, it generally covers three things. First is land. Land is immovable property. Second is benefits arising out of land. Benefits arising out of land means development rights, leasehold rights. These are the examples. These are the benefits arising out of land. Third, things attached to the earth. What you mean by things attached to the earth, like wall, building, etc. So this is the basic definition of immovable property. And then we have various jurisprudence on immovable property, various case laws, etc. What do you mean by immovable property? And if we see the crux of those case laws, the crux is that immovable property can be categorized based on two principles. First is a settled principle. Second is not yet settled. What is the settled principle? The settled principle is the principle of degree and extent of attachment. It means that if I'm in a position to move the goods from one place to another place without substantial damage, then that is a movable property. That is not an immovable property. Like chair, I'm in a position to move it from one place to another place. Second is, if I cannot move the chattel from one place to another place and it requires substantial amount of dismantling and substantial amount of damage, then it becomes an immovable property, say building, etc., which I cannot move. So this is the principle which is settled, degree and extent of attachment. If you can move it, movable. If you cannot move it, it requires damage, it is immovable. That is first principle. Second principle is, even though technically you may move it, I repeat, even though technically you may move it, but the intent of that property that is for the beneficial enjoyment of the land. Let me give you a few examples, like telecommunication towers, like partitions in an immovable property, glass partitions, storage tanks, telecommunication tower, prefabricated buildings, like prefabricated buildings. You may technically be in a position to move telecommunication towers, etc. You may technically be in a position to move, but the intent is never to move. It is always there for the beneficial enjoyment of the land. So this is the second principle on which we have various kinds of judgment, positive judgment also, negative judgment also. And there is a matter pending at Supreme Court in the context of telecommunication tower only, which will be very useful for other areas also, which we await. With this in background, with this basic concept in background, let me come to our case study. There are various questions which are being raised in the chat box. We will be answering all those questions in the end. Whenever you construct a factory or a plant, what do? First, you acquire land. That can be a freehold land or that can be a leasehold land. That's a pre-construction activity. Then second is the civil work which you undertake. That is actual construction of building, the structure which you actually construct, the building. And again, building can be like you construct brick by brick. Or second is you assemble the building by way of prefabricated structures. It's a new concept, prefabricated engineered structures, using which to bring out those structures, simply assemble the building. And second is you construct the building. Third is you use various kinds of plant and machinery in the building, like lift, HVAC system, various plant and machinery, furnaces, etc. And then there are various movable items like computer, furniture, etc. So these are broadly the categorization of various expenditure and various assets which I will be acquiring while constructing my plant. Coming to the land part, whenever I acquire a land on freehold basis, no GST is there. However, on freehold, on leasehold land, there is a GST liability. Even if the land is transferred for 99 year of lease, still there is a GST liability, etc. So whatever liability, whatever GST you are paying on procurement of leasehold land, whether you will be in a position to claim the credit, whether can you claim the credit of the GST paid on renting of land services, the answer is yes. And the reason is that what is barred under section 17.5 is the goods and services used for construction of immovable property. That is a service or goods used for construction of immovable property. In this particular case, procurement of land, say you pay a commission on procurement of land or you pay a GST on rental of land. That is a service prior to construction of immovable property. That means it's a service which you avail prior to the construction services. So in this case, no reversal required to my mind. Moving to the second activity of civil construction, civil work. Whatever civil work you are doing, interior designing, construction of building, etc., credit cannot be available because it is specifically barred under section 17.5. However, these days, as we discussed, there is a concept of prefabricated building structures. So technically, somebody may say, sir, I am not building I'm not constructing the building using some old mechanism. I am erecting the building by way of prefabricated structure, and technically it is in a position to prove that I will be in a position to prove that I can always dismantle this building and transfer it to any other place. So again, here technically I will be in a position to move the building if I'm making it with the help of prefabricated structure, etc. But practically my intention is not to do so. My intention is to place that building using this structure for the benefit enjoyment of the land, and my intent is never to move. So I discussed the case which is pending before Supreme Court for telecommunication tower. The same principle will follow for prefabricated structure also. There are few advanced rulings which are negative in GST. So we are not advising you take credit. It is, I know this is very disputable. What we are advising is you take credit and reverse under protest. So what we are advising is that for prefabricated structure, you take credit, reverse under protest, and write a letter that tomorrow, if a favorable judgment comes, I will be in a position, I should be in a position to reclaim the credit. I have the right to reclaim the credit. Moving on to the third part is the procurement of your lift, HVAC system, other plant and machineries. So all your HVAC system, lift, etc., whether credit available or not, we have various kinds of advanced rulings, negative also, positive also. The crux is why there are negative advanced rulings. What is the reason given by them? They say that in case of lift or HVAC, they become part of immovable property, hence credit should not be available because credit of construction of immovable property is barred. But my counter to it is that we understand construction of immovable property is barred, but there is an exception to it. An exception is plant and machinery. So if I'm constructing something which is resulting into a plant and machinery, then credit should be available, even if it is immovable property. I write that. Let me give you an example. We acquire various kinds of big machineries, vessels, etc. Big pressure vessel, furnaces. These are so big machineries. These are actually part of immovable property only. Still credit available because these are plant and machinery. Similarly, for lift, HVAC, etc., even though they become part of immovable property, but the law itself says, section 17.5 itself says, if an immovable property is nothing but a plant and machinery, then credit should be available. And there is no doubt that lift and HVAC systems are plant and machinery. Hence, credit will be available for lift, HVAC, all these things. And for movable items, computer, furniture, again, credit is available. So what we have discussed is that whenever we are constructing a plant, there are certain items for which credit is available. There are certain items for which credit is not available. If you give the entire contract to a single contractor, turnkey contract, he is constructing the building, he is placing the lift, he is placing the HVAC system, he is only buying furniture, etc. You have given a complete end-to-end turnkey contract. Credit will be highly disputable because it will become a composite supply wherein construction of building is the essential character. No credit available. However, if you vivisect and give it into different buckets, for civil work, you have a different contract. For lift and HVAC, you have a different contract. For procurement of computer furniture, you have a different contract, different invoice. To my mind, credit is available. So that the best structuring which you can do is that whenever you are constructing a factory, please see the BOQ, how the construction will be undertaken, and accordingly refine your contracts. Whatever items which are eligible for construction, please have purchase order different, please have contract different, please have their invoices different. Very, very important. With this, we will now move on to our next case studies, which will be taken by my partner, Chetan Agarwal. Over to you, Chetan.
Thank you, Tushar.
I'm stopping my screen. Chetan, you can share the same.
Yes, yes. So the next topic is gift versus sales promotion. This is one of the most common topic which is mostly affecting to most of the companies and business enterprises, where they generally formulate various types of sales promotion scheme. But most frequent questions which the client or the companies asked us without the in respect of the eligibility of ITC, whether the goods they are supplying or distributing as a part of this scheme, this sales promotion scheme, whether ITC would be eligible or not. So let us now see what is the basic provision and what is the restriction which is restricting these credits to the companies. So section 16 is the basic section which allows a registered person ITC in respect of all the goods which are used in the course or furtherance of business. So in GST, basically, this provision has basically widened the scope of the eligibility of ITC in comparison to the previous taxation regime. But while section 16 allows ITC in respect of all the goods, all the services which are used in the course or furtherance of business, but the legislature has also provided a negative list in section 16 in respect of which ITC is not available, even though if it is used in the course of business or in the furtherance of business. If a particular this expense fall within the ambit of section 17.5 list, then ITC is not available. So for our this session, the relevant provision is section 17.5H, which provides that input tax credit in respect of goods lost, stolen, destroyed, written off, disposed of by way of gift or free sample shall not be available. So if any goods which we have purchased, which the company has purchased, but it is lost or stolen or destroyed, or it is given as a gift or as a sample, then ITC is not available. So for our session, we are discussing only the term gift. So what is gift? Gift is not defined under the GST law. So we have to refer the other legislations or what the term give meaning in the common parlance through some dictionaries or jurisprudence. So going by those definitions by the dictionary meaning or other legislations, we can see that gift is something which is given out voluntarily without any obligation and without any consideration. If any obligation is attached in respect of any goods which we are giving to any other person, then it would not qualify as gift. It will qualify as gift only if it is given voluntarily and without any consideration. Then only it will qualify as gift. So various kinds of schemes can be formulated by the companies or the taxpayers for their sales promotion. We have taken some schemes like foreign trips, posters, distribution of these posters, voting brochures, price list, buy one get one scheme, then distribution of calendar, diaries, pen, crockeries, then distribution of gifts on achievement of certain targets. These all are the schemes which are generally formulated by the companies to in their day-to-day business affairs to augment their sales revenue. So coming to the first type of this scheme, this is voluntary offering of this foreign trips. So in this case, there is no obligation attached. In certain cases, when some dealers or distributors are performing very well, so the companies generally offer some free tips to their distributors who are performing very well. But at the same time, there is no condition attached to this offer. So in this case, whether ITC should be available to the this company or not. In Sarfa Courts India Private Limited, Karnataka Authority for Advanced Ruling Authority has held that ITC in respect of such free tips provided to their distributors or any other person should not be available, as this is similar to gift. But in our view, section 17.5H is the limitation of section 17.5H is restricted only in respect of goods and not services. If we see the provisions, it says input tax credit in respect of goods launched. So the restriction is limited only in respect of goods. It is not getting extended for services. So here what is being offered is a service, not goods. So in this case, restriction of 17.5H would not be applicable, and ITC shall be available to the company offering this free trips to their distributors. Then second kind of this promotional schemes is like distribution of some promotional or advertisement material to the distributors and retailers. This we can bifurcate into two categories. One is advertisement material, second is promotional material. Advertisement material may include this brochures, price list, rate list, hoardings, boards, and promotional items may include diaries, pen, calendar, t-shirt, on which the logo or name of the company is embossed. So in this case, BMW India Private Limited, the Authority for Advanced Ruling Authority, this Haryana, has denied ITC on this promotional items being distributed by the company. But in our view, we have to see what is the basis, what should be the basis, whether this should be denied or not. So for this, first we have to see whether this advertisement material or the promotional items would constitute gift or not. Advertisement material like brochures, price list, and these hoarding boards, these are not in the nature of gift. Reason? Because these gifts are these items are given as a means of communication. They does not provide any value to the recipient. This is provided to communicate information about the product, price, or about the background of the company. For this purpose only, these goods are generally given to the distributors or the retailers with the specific instruction for their display. The retailers or the distributors getting this advertisement material, they cannot use for their personal consumption. So it does not have any intrinsic value or most economic value for them. Therefore, brochures, price list, or any other advertisement material which is only a means of communication will not qualify as gift, and ITC should be available for these goods. And then coming to second item, that is promotional items like diaries, pen, calendar. In this case, the company generally embosses their this trademark and logo, and they generally say that content that we are doing supplying this for promotion of our brand or promotion of our this increasing the sales revenue. But still in this case, what is happening, these goods have economic benefit for the recipient. They can use it for personal benefits also. So these goods, in respect of these goods, ITC have to be reversed, because this will qualify as gift because it is distributed without any obligation. This is distributed voluntarily, and these have economic benefit for the recipient. So because of this will qualify as gift, and ITC will not be available in respect of these promotional items. Then the next issue is when we are distributing these items and we are claiming this ITC in respect, we are distributing these items. Suppose then there could be a scheme like 1+1, or if you are 1+1 item and then there could be schemes like if you are achieving certain targets, then we will supply you certain other goods. Suppose you are achieving the target of 1,000 bags and you are purchasing that 1,000 bags, and then the company is offering you gold coin after completing your target. So whether that particular supply of gold coin, whether that will qualify as gift, or suppose company is giving you one item free on purchase of one item, whether that free item will qualify as gift. So in the first case where the company is giving one item free along with the purchase of another item, in that case it cannot be said gift. It is also clarified by the circular issued by the department. In that case, they have clarified that in this case, you cannot claim that this is gift, but at the most you can say that the supplier is supplying two products for a single price. In this case, what have to seen or what precaution have to be taken, that the free item should not be of the higher rate, because if you are supplying two items, one for one item which you are recovering some consideration, another item which you are supplying free of cost, in that case, if that supply becomes a composite supply, in that case there is no issue. But in case it becomes a mixed supply, in that case the higher rate of the two would prevail. Suppose if you are supplying item A, which is taxable at the rate of 12%, and if you are supplying giving free item B, which carries a rate of 18%, in that case, if the package of these two items become a mixed supply, it qualifies to become mixed supply under section 8 of the CGST Act, then the GST has to be discharged at the rate of 18% on the entire consideration. That have to be taken care of. Suppose now you are we have discussed that another scheme, target based scheme. In that scheme, you are supplying this, you are meeting, your retailer or your buyer is meeting some target. Then after meeting that target, you are giving the committed item like gold coin. Whether that will qualify as gift, in our view, it will not qualify as gift, because it is not given voluntarily, because it is like an agreement. You have floated some scheme, you have announced that scheme, and your customers or distributors have participated in that scheme, and after they have met that target, after they have achieved their target, in that case, that company is under an obligation to supply or provide that committed item like gold coin to the retailer or the distributor. So because this gold coin or other item is supplied under the obligation and not voluntarily, in that case it will not qualify as gift, and therefore ITC shall be available. Then again, so if we see, there is very thin line of differences in this for qualifying whether it will qualify as gift or not. So the company should take care while formulating their schemes, how they should formulate their scheme. They can offer only those kind of goods which carries lower rate of tax rate in comparison to the main item which is supplied, so that even if it qualifies mixed supply, then higher tax liability would not arise. Then again, the way of presentation on the invoices, like if you are supplying one item and for which you have mentioned some consideration on the this tax invoice, and you have mentioned another item as free, then there could be dispute by the department, though you can succeed at a later stage to avoid initial level of this departmental actions. What you can do is like to mention this consideration for both the items and disclose that discount amount separately. So in that case, department cannot argue that it is a free item supplied by the supplier. So there could be various strategies which have to be considered while formulating these schemes. Then coming to
Just a second, Chetan. So very well said, Chetan. So effectively, if we see the entire discussion, we can brief the principles which have emerged from the discussion which we just had. First, this entire section 17.5 restriction H, it is applicable only in respect of goods. It is not applicable in respect of services. So if you are offering free trips to the dealers, tour and travel services to the dealers, you are not required to reverse any credit. Even if it is not an obligation, it is a voluntary trip which you are giving to them. So any service is not covered and hit by section 17.5H. The first principle. Second principle which have emerged is that I need to make a distinction between the advertisement material and the promotional material. Advertisement material are those types of material which are used as a means of communication, that is hoarding, pamphlets, rate list, etc., etc. No reversal required because these does not carry any value to the recipient. Whereas diaries, pen, t-shirt with logo, etc., even though used for promotional purpose, but they have an economic value to the recipient. Hence, there is a reversal. So even your accounting, what we are generally seeing in accounting, we have a single head of promotion advertisement wherein every expenditure is there. You need to bifurcate and segregate these expenditure properly from accounting perspective also. And somebody has asked the query in chat box also, what if I show this print dairies expenditure as printing and stationery? See, effectively, it will be like accounting the expenditure in a wrong head. Printing and stationery is an head which is used for accounting those printing and stationery expenditure which you are incurring for your self-use. However, for distribution of dairies, etc., it has to be under either the promotional heads, etc. So legally credit is not available. And then the third principle which we have emerged is all our target-based incentive schemes, etc. So under a scheme, whenever I am giving any complimentary item, I have to take three precautions. First, ITC will be available to me because it is not in the nature of gift. If you are purchasing 100 units, I give you a refrigerator. Good enough. It is ITC is available. It is not in the nature of gift. But the first precaution is have an agreement in place. Have the scheme properly drafted. So it should come out as an obligation that you are obliged to give this complimentary fridge or a refrigerator to the dealer if he purchases 100 units. That should be there. Second important thing is please understand the concept of mixed supply. If you are taking a credit, it means you have received a single consideration for your 100 unit as well as refrigerator. If the unit, say you are selling a normal mobile phone, which is 18%, and the distributor, thereafter you give him a free complimentary bike, which carries a higher rate. In such a situation, there is a problem of mixed supply, higher rate will be applicable. So whenever you are giving complimentary items in target-based schemes, always have the rate of tax same as that applicable on the main goods or a lower rate of tax. That's the biggest precaution. And the third is the way I'm invoicing and documentation, which Chetan explained. We have seen buy one, get one free. Generally, the way invoices are there, you place one item, you charge fees, second item, you write free. We have seen at ground level, at departmental audit level, they say it is free. Credit is required to be reversed. Please redo the invoicing and documentation part. Write the prices of both the item and show it separately in the discount as Chetan explained. So these are the precautions which we have to take while devising all our promotional schemes to attain maximum tax efficiency. Yes, Chetan, over to you.
So coming to our next topic is employee related expenses, which again impact most of the companies. In this, basically, we are discussing only three topics like giving this uniform, gloves, helmet, safety shoes, or other office laptops or other items to the employees in the course of employment, which are used by them in the course of employment. Then second topic is hotel or travel expenses incurred by the office these employees for their business uh, travel. Then third one is food and beverages. The relevant section for this issue is section 17.5b, which again restrict ITC in respect of food and beverages, outdoor catering, beauty treatment, health services, cosmetic, plastic surgery, except when used for the purpose specified therein, or the same is obligatory under any law. Section 17.5g, goods or services when both are used for personal consumption. Third, section 17.5h, goods which are given by way of gift or free samples. So when the companies, in some cases, the companies are giving uniform, gloves, helmets, safety shoes, or office laptop, whether ITC is allowed on these expenses or not. So in most of the cases, these expenses are incurred or uniform or this safety shoes or helmets are given for the protection of the employees or for the precaution that they should not meet some accident or some other unhappening. While there can be certain items which are given like laptop, which is required for the execution of their job as per the employment agreement. So if we consider two provisions, under two provisions, department can deny the ITC. First is 17(5)(g), which says if any item which is used for personal consumption, then ITC is not available. For this aspect, this uniform, gloves, and helmet, what we can say that personal consumption is not defined, or the scope of what personal consumption is not provided in the GST law. So in our view, this is not relatable or applicable to the employees, but its application has to be seen qua the taxpayer, not the employees. So in this case, since these items are used by the employees and not for the personal purpose, but only for the performance of their job while during the office hours, and in most of the cases they even leave this uniform, helmet, or safety shoes in the factory or in the offices after completing their job. So it should not get covered under the phrase personal consumption, and hence it should not get hit by section 17(5)(g). Then section 17(5)(h), which says ki it should not be qualified as gift. So in our view, it is not qualified as gift because it is used only during the employment hour. It does not have any economic value or personal value for the employees. So it would not qualify as gift, and therefore it will not hit by section 17(5)(h). Accordingly, ITC in respect of these items would be available to the companies. Then second, expenses, whether ITC is incurred available in respect of the hotel and travel expenditure incurred by the employees while performing their job. So in many cases, the employees have to travel out of stations or in other states or other cities for attending meeting or for their sale promotional activities. They have to travel. While traveling, they have to incur this expenditure on hotels and traveling expenditure they have to incur. So this is basically this is not any kind of gift. This is a business expenditure, and therefore ITC, and this is not for the personal consumption because this traveling is meant for the business purposes, business meetings, and it will not qualify as this personal consumption. Therefore ITC shall be available in these cases. With regard to the ITC on hotel bills, ITC in respect of room charges will be available subject to the condition that POS should be in the state from which the expenditure is incurred. Suppose an employee based in Delhi travels to Maharashtra, and there he avail this hotel accommodation service. This hotel will raise invoice with POS in Maharashtra because the immovable property is located in Maharashtra. Therefore, the company which is incurring this expenditure based in Delhi would not be in position to take ITC because of the POS restriction. But if this traveling is happening in the same state, in that situation, the company can take ITC. With regard to food, ITC is not eligible because it is specifically restricted by section 17(5). So if the hotels are charging for compositively for both, there should be separate charges for room charge or food charge in a single bill. So ITC would be available for room charge subject to the fulfillment of the conditions of POS. ITC in respect of food charges would not be available. Then coming to next issue is canteen services, whether ITC would be available. In this case, there could be those two situations. One is this food can be provided by the company at the subsidized rate, and second, free supply of food or beverages. If the company is providing this food on this at subsidized rate to the employees, in that case it would qualify as supply. As per the rate notification, GST at the rate of 5% would be payable on this supply, and the rate notification itself says that this 5% is chargeable with the condition that ITC is not eligible on in respect of this food supply. So when there is specific restriction with regard to ITC in the rate notification itself, the question for availing ITC in respect of food supplied at the subsidized rate does not arise. Then another case where food and beverages are supplied free of cost to the employees. In that case, when the food is supplied free of cost to the employee, in that case it will not be treated as deemed supply, but and ITC would also not available because of the specific restriction provided with regard to food and beverages in section 17(5). However, if it is given free of cost under the mandatory obligation under any law, then in that case there would be exception to that restriction, that ITC would be in there, that there would be restriction exception to that restriction with regard to this ITC on food and beverages. So in that case, ITC would be available to the company. So in this case, there would be three situations. If you are the company is supplying food and beverages on the subsidized rate, tax liability has to be discharged at the rate of 5% on the output on the amount charged from the employees. ITC would not be available. If the food and beverages are supplied free of cost and it is not under any obligation under any law, then ITC would not be available. If it is supplied free of cost and it is supplied under any obligation under any other law, in that case ITC would be available. Then coming to the next topic, CSR expenditure. So, and as per section 135 of the Companies Act, companies having the specific turnover or a specific limit of profit have to contribute 2% of its average net profit towards the corporate social responsibility. They have to incur this expenditure. So the question generally arises whether ITC in respect of these expenditures incurred by the company, whether that would be available. So as we have seen section 16, in that ITC is available in respect of those input and input services which are used by the registered taxpayer in the course or in the furtherance of business. So in this case, as we see, these expenditure are incurred under the obligation casted by section 135 of the Companies Act, and because of those these obligations, these expenditures are generally incurred by the companies. So this expenditure are incurred in the course of the business, because while running the business they have to also comply with the provisions of section 175. Therefore we can say that this expenditure is incurred in the course of business. Further, in the case of Messrs. SL Propack Limited, it was held that CSR also augment the credit rating of the company as well as the standing of the company. So in a sense, it enhances the reputation of the company, which is also very essential for the growth of the business. Therefore, we can also say that it is also used in the furtherance of business. So this, by this, the first test of any input or input services which are used for for complying with this law, that there should be used in the course of furtherance of business, that gets qualified. So now coming to the second condition for claiming ITC, that whether it is hit by any provision of section 17(5). So there could be broadly two types of this contribution. One is like creating some immovable property. Second is like supplying of free items. So if suppose a company is constructing some school as a part of its CSR program, in that case it will result in the construction of immovable property, which is again specifically barred by section 17(5) of the CGST Act. Therefore, if the company is incurring any expenditure as a part of CSR expenditure, even though this expenditure is incurred in the course of furtherance of business, but because being restricted by 17.5, ITC would not be available. If the company is supplying certain items like some this furniture for school or any other item, movable items, they are supplying as a part of CSR items. In that case, because it will not qualify as gift, because it is supplied under because due to the obligation casted by section 175, it will not get hit by section 17.5, and therefore ITC would be available in respect of those goods. So the company may decide to take ITC in respect of this CSR expenditure if they are not restricted like immovable property. Alternatively, what companies can do, they can take ITC and reverse this ITC and can wait for further jurisprudence on this issue to be settled. After it is settled, then they can reclaim this ITC in their GST returns. Now over to Tushar for.
I think, Chetan, we have discussed enough of case studies considering the time. So what we will do is that already 1 hour and 20 minutes are almost over. So we will take the question and answers now straight away. And then we will have a separate session for discussing other practical case studies being faced by the taxpayers. So let us go to the question and answer session. So we will take various questions which have been posted on the chat box one by one.
Sir, yeah, so sir, before starting the question, I do also have a question. Like Sir Chetan sir was discussing about the personal consumption goods. So this is I think the basic problem which every company faces is that the telephonic expenditure. Okay, that can be used for personal purpose also and professional purpose also, and similarly other things also. So how to handle these such cases?
See, in case of telephone, etc., wherein the employees is using the same for business purposes as well as personal purposes, then under Rule 42-43, there is a specific mechanism to deal with this. In these cases, wherever you feel that these are certain expenditure which are also used by the employees for personal purposes, in such a situation, you can go ahead for with 5% of reversal. So under Rule 42-43, there is a specific provision which says that if a goods or service is used both for personal purpose and business purpose, then reverse the credit to the extent of 5%. So that is a provision which can be opted. However, generally what we have practically seen is that whenever there is a mobile expenditure, then in the books of account, if you are dealing the entire, say 100 rupees is the expenditure, and in books of accounts, you are 100 rupees is shown as an expenditure. Even for income tax purpose, you are showing entire 100 rupees as an expenditure, then you can take the full credit. However, you have to see the synergy between the way you are representing in income tax law as well as in GST law. So that should be kept in mind. Otherwise, that 5% provision is there.
Okay, thank you, sir.
Now, moving to the question and answer which are on the chat box. So let me, Chetan, what we will do is that let me see the latest questions first, and you can see the chat box, the initial questions. So we will accordingly answer. So the ITC on airfare to and from, whether ITC is available or yes, the ITC is available on the airfare. It is not a service which is meant for personal consumption. Ultimately, the transportation of passenger services has been used for business purpose only. Hence, credit will be available. But you have to make sure that whenever you are booking a ticket, etc., they ask for GST number, or you are booking from a travel agent, they ask for the GST number. Communicate that GST number to the airline so that you get a GST invoice, as well as that GST invoice should be reflected by the airline and should get auto-populated in your 2A. All airlines are doing as of now. Earlier, there were certain problems. So credit is available. Do give your GST number to them. ITC on AMC charges paid on lifts can be availed or not. So ITC charges paid on AMC charges, ITC on AMC charges is available. These AMC charges are in the nature of repair and maintenance only. So in fact, every ITC on repair and maintenance of building, lift, plant machinery, anything is available. However, ITC on repair and maintenance of buildings, which is capitalized, If the repair is of such a nature that you are capitalizing and repair is of building, then only there is a bar. Otherwise, general repair and maintenance is available. ITC on general repair and maintenance, which is of revenue nature, is available. Some banks are charging GST on bank charges, but the same is not reflecting on GST portal. How do we deal with these cases? So this is a practical problem which is being faced. You have the copy of the bank statement. So generally what you have to do is that you have to go to the bank and communicate with them and ask the copy of a GST invoice. Effectively, every bank is issuing GST invoices. Somebody is issuing a consolidated monthly invoice. Somebody is issuing different invoices. It may so happen that what you get is only a bank statement. Otherwise, generally in their system, GST invoices are generated. So you have to actually deal with them and get the copy of these invoices, etc. Because we have seen in most of the banks, these GST invoices are being generated, tax is being paid properly, and it is just the communication gap which is there. Can you please narrate the findings of Honorable Odisha High Court in the case of Safari Retreats and latest development in this case? So it was a very, very different kind of judgments, though I have my own views. So in what happened in Safari Retreat was that it was a case of renting of immovable property services. A person constructed a building and then rented it out. The question arose was the ITC on the construction services, whether it is eligible or not. Generally, if we see section 17.5, it says that ITC is not available if you are constructing a building for your own use. In this case, the court held that using this building itself, you are earning your rental income. So there is a direct link between the rental income which you are earning and the construction of the building, and hence it cannot be set for construction of building for own use, and hence credit is allowed. So that's a favorable judgment. However, the matter is pending before Supreme Court. Otherwise, we have referred this matter and we have discussed this matter at large with various at GST policy wing, etc. also, and various companies have gone and represented similar kind of matter. Government perception is very clear. They don't want to allow credit on construction of building which is rented out. Very clear. They say that we have written the law specifically, credit is not allowed. Even the reasoning in this Odisha High Court, let's see how it will drill down in, and how the Supreme Court finally gives its verdict. What we generally advise our client is, at this moment, please don't utilize the credit. It's a very litigative matter. Take the credit, don't utilize, or take and reverse the credit and reavail it whenever there is a final judgment on this issue. Chetan, some issues you want to take?
1 minute.
There are issues related to lift and is ITC available for lift, transformer, etc.? Yes, ITC is available on the plant and machinery which you have in-house. Lift, etc., HVAC system, ITC is available.
Hotel bills not reflecting in GSTR 2 and 2B. So any ITC in respect of any invoice which is not appearing in 2 and 2B, ITC will not be available.
Import ITC, it is not reflecting in GSTR 2A and 2B.
Then we can take that credit because ITC is restricted only for this reflection condition is limited only to invoices domestic, issued domestically.
Absolutely, and not on import. So even practically, when we are going and doing the scrutiny of returns and assessments, etc., there if we show that the difference of 2A, 3B is on account of import, they agree and drop the case. So practically also the officers are admitting and they have an instruction that import of goods, no issues.
And normal case t-shirt bags given to employees not eligible for inputs. So if bag is given like for carrying computer and all, so in that case we can say that it is for office use and ITC would be available.
Scribbling pads, whether ITC is available if we have our own logo. Yes, it's just kind of your printing and stationery expenditure, and hence ITC is available.
Whether section 17.5 is specific in nature. Yes, it is specific, it is not general, because only those items which are covered under that section 17.5, their restriction is regarding those items only. Other than that, ITC would be eligible if it is used for making taxable supplies and subject to other conditions.
Another question by Mukesh is whether ITC is available for canteen expenditure for food provided by the company on discounted prices to employees. See, sir, the issue is that whenever you are providing food to the employees and charging them, it becomes a supply. When it's become a supply, you have to pay output tax on the amount you recover from the employee, and that output tax is at the rate of 5%, and this 5% come with a condition that no ITC is available. So whenever you are providing subsidized meal to the employees, charging and recovering the amount from them, GST is payable on output first, and no ITC is available on the input.
Whether ITC can be availed on hotel invoice having food and tariff charges separately? Yes. In respect of tariff charges, ITC for food, ITC would not be available. Then
if pens, diaries, calendar is shown as office expenditure and printing expenditure, whether ITC is available. See, there are two parts. Legally, pens, diaries, you are distributing to the dealers. ITC should not be available for the reason which we have discussed, because it is in the nature of gift, which gives an economic value to the dealer. But what you are doing is that instead of showing it under sales promotion, you are showing it under printing and stationery. By changing the head, the nature of the input tax principles will not change. ITC will still not be available. It's just that if you show it under printing head, then it will be difficult for department to scrutinize and find out these kinds of transactions. But legally, ITC still remains ineligible.
Even in that case also, in my understanding, quantum would be relevant. Suppose you are purchasing thousands of this diary and you are booking under printing head, then they can trace that also. Then whether ITC is eligible on goods sent also as pre-samples in export, in my view, it will not qualify as supply, even if it's sent for export, so ITC would not be eligible.
Chetan rightly said, but like in case of export, the basic principles, legally, the definition, the way law is structured, it's not a supply. Section 17(5)(h), credit should not be eligible because it's a sample, etc. But ultimately, the basic principle is taxes should not ever be exported. If we look into that larger principle and see that in case of export transaction, whenever we are giving these kinds of samples, etc., can we bring out an argument that since credit and taxes can never be exported, and on that ground this has to be restricted and read down only to domestic transaction, not to export transaction, is something which has to be contemplated at a future point of time. So it's very, very risky, I understand. So credit should not be available. It's just that we can write a letter and protest, so that in future, if some judgments come, we may.
Again, but one idea for this foreign currency, foreign exchange also.
Right.
But in this case, that may not happen.
Absolutely, absolutely.
Then,
yes, we will be sharing our presentation for reference purpose. ITC is not available on purchase of cars. So any car which you purchase up to which has a capacity up to 13 passenger, no ITC on purchase of car, no ITC on rent a cab if it is up to 13 passenger. However, if you're purchasing a bus for the transportation of employees, which has a capacity of more than 13 passenger, or you're renting a bus which has a capacity of more than 13 passenger, credit available. Another issue raised by Ramana is whether ITC should be allowed on giving of bike on achievement of target-based scheme. So in case of target-based scheme, you are selling paints. If a dealer, say your scheme is that if a dealer purchases goods worth ₹1 crore, you will give a bike to him. In such a situation, there is a scheme in place, there is an agreement in place. So an achievement of ₹1 crore of target, you give a bike to him. It is not in the nature of gift because there is an obligation to give you. It is not a voluntary payment. It is as per the schemes. The real problem is legally, it is not in the nature of gift. ITC will be available. The point which we wanted to highlight again is that if you take the ITC, the problem will come is on your output rate of tax. So your product, say, is taxable at suppose 18% rate of tax, and you're giving a bike which is at 28% of tax. So in this case, your entire transaction will become a mixed supply on which 28% exposure will be there. So till the time you give gifts, these complementary items of a rate which is equal to your main product rate, then it is okay. If high rate, then there is a problem. Yes, we can keep under the same rate, then it is okay. Absolutely.
Interior cost and furniture and air conditioning in developing office in commercial property, will ITC be eligible? Interior activities or renovation activities are considered as construction activities under section 17(5). So ITC in respect of those things not available. But if furniture, air conditioner, conditioning, and all these things are purchased separately, then ITC will be available for those goods.
ITC available on uniform and shoes also. Mukesh ji has asked. Another issue is on employees insurance. See, no ITC is available on health insurance, life insurance. ITC not available, but you may take a different stand for key man insurance because there the concept is different. Otherwise, normal health insurance, life insurance, ITC not available. As a part of precaution, you have suggested for problematic cases, ITC avail and reverse so that even some favorable judgments come, we can re-avail. So in this case, we have to reclaim ITC, claim and reverse in the same month. Yes, you can do it in the same month. Claim it on the table, availment table, and reverse under the reversal table in the very same month. And down the line, whenever a favorable judgments come, you will be in a position to reclaim. And this goes back to the history of excise. In excise law also, we had a similar provision that you have to claim within 6 months, etc. Like we have today, we have to claim within 1 year. There, the courts have held that in case of reclaim, no such time limit is applicable. There are various jurisprudence on that. Insurance and repair and maintenance of car. See, the concept under section 17.5 is if you are purchasing a motor vehicle up to 13 passenger sitting capacity, no credit on purchase, no credit on rental, no credit on insurance, no credit on repairs. If you have a dealing with a motor vehicle wherein the passenger capacity is more than 13, say bus, credit available on bus, on rentals, on repairs, on insurance. Amount paid for leasehold land taken from government for a household affordable housing. See, in case of leasehold rents, whatever rentals we pay to the government, generally there is an RCM. For commercial projects, there is an RCM. For residential, there are certain exemptions which are given under the exemption notification. So we can discuss this query on case-to-case basis. Can ITC be availed on architect charges paid to the consultant for new building construction? See, architect charges are nothing but a part of construction of buildings. So credit availment is highly disputable. We are not availing this. We should not avail this credit. I think we have discussed many of the queries and we have crossed 5:30. Let us take the last 1 or 2 queries more, Chetan. Can we avail ITC on imported goods at FOC basis? See, in case of FOC, whenever you import in goods, you have to file bill of entry, even if it is on FOC basis. So ultimately, when you file bill of entry, you use it, you file it under your GST number, you will be in a position to claim the credit because you will be satisfying all the conditions for claiming the credit. Receipt of goods, bill of entry in your name, goods used in your business, and there is no condition of payment to the foreign vendor. Payment within 180 days condition does not apply to foreign vendors.
ITC on capital WIP. Again, we believe that this is related to immovable property. So ITC would not be available.
Until unless there is a plant and machinery.
Plant and machinery.
ITC on cars used for providing services. Generally, ITC on car is not available. However, if you are using it for further rental services, there are some exceptions under section 17.5, then the credit will be available. I think now with this, we conclude our session. We thank you all for the active participation. Over to you.
Yeah, so thank you so much, Tushar sir and Chetan sir, for such an insightful session. Indeed, all the topics which we have taken, like you have taken today and case studies, they deal with the practical aspects which we face on day-to-day basis. So they are very, very important for us to understand so that we can, it can help us in our day-to-day activities. Thank you so much for such a wonderful session. And in case any of your questions have not been answered, so you can write us on our mail ID and we can ask the sir and you can get back the answers to all these questions. Thank you so much.
And also, ma'am, please share the presentation with everyone.
Yeah, sure. Thank you.
Thank you. Thank you, everyone.
Thank you.